Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1154A, and today's date is December 16th, 2016, and the title of the episode is Beware the Quad Witch Has Arrived, Prepare Accordingly. Let's get into the economic collapse financial news. Now, as we know, the gold market is manipulated. We know Deutsche Bank, they've been fined for silver and gold manipulation. They pointed the fingers at other banks that are associated with this. And we are getting more and more information that explains pretty much how they do this and at what point they actually bring down the gold price. In a bid to have UBS reinstated as a defendant in London on the London Gold Fix antitrust lawsuit, plaintiffs' documents submitted to a New York court last week include explosive chat room transcripts of UBS and traders from all different banks, encouraging each other to push, smack, and whack gold down. And when you read these transcripts, they're unbelievable. So what they do is they pick a point where they will not allow gold to go higher than a certain dollar amount. At one time, it looks like it was $1,430. And they said, when gold pops to $1,430, this is coming from UBS, we whack it. UBS says, you sell your $50,000, I'll sell my $20,000, then we'll double up and produce our liquidity. And pretty much what they're doing right now is they just manipulated the gold market. They brought it down. And we can see this because we do have evidence that they use billions of notional gold. They send paper contracts out there and they continually smack it down. So right now, if you really think about it and you look at the gold and silver market, these are not the real prices. These are manipulated prices, and we're getting more and more proof on how they actually do it. One chat sees Deutsche Bank trader confirming with UBS that his trading had indeed influenced the gold fix. The secret association between traders appear to be close-knit, with members willing to assist their opposite numbers at every chance. And this lifts the curtain for once and all on the dirty role of bank suppression in gold and the silver markets. And we see right now, this has been going on for quite a while, and it's all coming out now. Why are they doing this? Why do they want to keep the gold price so low? Because if it moves up, people are going to see this and say, what is wrong with the economy? Why is gold moving up? Let's dump the dollar, get into gold. Remember, the dollar has been devalued over time, which usually means gold rises because you need more dollars to buy that ounce of gold. But this is not what we're seeing today. Now, we're seeing a lot of economic indicators, and they are not looking good whatsoever. This economy is deteriorating, and it's deteriorating very, very quickly. Now, of course, if you look at the stock market, you look at unemployment, GDP, all the manipulated numbers from the government, the central bank, you don't see this. You don't see what's happening in the background. Actually, it looks like 1929, 2008, where all eyes were on, the stock market and everything else. But behind the scenes, things were rapidly deteriorating and breaking apart. Home builders, well, they have this new sense of hope, which is absolutely ridiculous. But when we look at November's data for housing, for starts and permits, they collapsed. Mortgage apps are declining, interest rates inched up a little bit, and housing starts crashed by 18.7%. This is the biggest monthly plunge since the crisis peak in 2005. Housing starts are down 6.9% year on year. There's a 43.9% collapse in multifamily starts. Housing permits plunged by 4.7% month on month. What does this tell you? Things are breaking down very, very quickly. And it tells you that they don't have that much more time until they bring down this economy. Remember, they don't want a black swan type of an event because they don't have control over this. They want to keep control because if a black swan event does occur, let's say it happens out in Europe and a bank goes down, like maybe Italy, Deutsche Bank, and that goes down, and then it hits another bank, and all of a sudden, all the banks start crumbling and falling apart. Well, remember, the Fed, the EU, they've been telling us that the banks are strong. They've been doing these stress tests. And if the economy comes down this way, the people are going to look at the central banks and say, this was your fault. You lied to us. And we can see right now that they've been lying to us for a very long time. We see the GDP numbers. Well, they are being revised and revised and revised. We see the Nowcast, which predicts what the GDP is going to be. It went from 3% to 2.8% to 2.2%. It is down to 1.8% now for the fourth quarter. Wow, we went from 3.2%, it's going down to 1.8%. Of course, the government didn't come out with their numbers, and we know that they manipulate those numbers, but that's what they're predicting right now. So you can see where we stand. Most likely, if you take out research and development, Obamacare, and everything like that, GDP is zero or negative. And when we look at the stock market, well, the markets are priming for a major inflection point. The Dow is currently more overbought based on the 14-day relative strength index than at any point in the last 20 years. That includes the peak of the housing bubble and the peak of the tech bubble. Most likely, this is all going to start to fall apart in the year of 2017. And then for those people who look at numbers, if you notice, 2017 has the number 7 in it. And we've noticed in the past, people have pointed out that central bankers like to have their events with the number 7 in it. So this is very interesting as we approach 2017. Now, a couple reports ago, we talked about quad witching. And we can see right now that quad witching, well, it has arrived. It has arrived today, which means that things are going to start to really break apart. They're going to be volatile. We're going to see moves that are erratic. And we can see right now, we're starting to see this a little bit. We see out in Europe, stocks move from session lows to highs in the span of minutes. We see the yield on the 10-year Treasury drop from the highest since 2014, snapping a 6-day streak higher, underpinned by the Fed's more hawkish outlook for interest rate increase next year. And we see that the U.S. equity market open was a chaotic scene of volatility, complex tails, equity market stop runs, VIX and stocks tumbling together. And we can see this is the beginning, and things are rapidly falling apart. Now, Doug Casey is out there saying, at this point, you should be selling all your bonds. The bond market, going to be a disaster. Get out of it right now. At the same time, all of this is happening. China, they are dumping treasuries. Not just China, foreign central banks, other countries, they're dumping U.S. paper. Now, if we go back in time and we look at the latest monthly Treasury International Capital data for the month of October, which showed that the troubling trend presented 1 month ago has accelerated to an unprecedented degree. Recall that in mid-November, we reported that in the latest 12 months, we observed a record $375 billion in Treasury selling by foreign central banks in the period between August of 2015 to September of 2016. This was completely unprecedented in size. Now let's fast forward to today. When we look at the latest monthly update for the month of October, we find that Until a month ago, it was $375 billion in offshore central bank sales. September 30th has 1 month later, it has risen to an all-time high of $403 billion in Treasuries sold in the past 12 months. There has never been such an aggressive selling of US Treasuries over a 12-month period in history. And of course, the biggest seller was China, which sold a record $41 billion in US paper, bringing their total Treasury holdings to $1.116 trillion, the lowest amount of US paper held since 2010. And it wasn't just China, Belgium. And Belgium has long been rumored to be the venue where China keeps its secret offshore treasury holdings, and that's courtesy of Euroclear, also dumped its treasury holdings. And in October, its stated holdings tumbled from $143 billion to $117 billion. Now, foreign central banks, sovereign wealth funds, reserve managers, virtually every other official institution in possession of U.S. paper is liquidating their holdings at a disturbing pace. So if there's a seller, there's got to be a buyer. Who are the buyers? Well, it's private demand. In other words, just like in the stock market, just like in the real estate market, those individuals, those countries, those foreign central banks, they realize the end is here. Start dumping the paper. Just like in the stock market, the insiders know. They understand that when the stock market reaches a certain point, sell off. Let the retail investor take over. In real estate, people realize this is the height of the market. Start selling the properties at the higher prices. Sell it off to, retail investors, everyday people who will buy the homes, and let them worry about when the whole thing comes collapsing down. This is what's happening right now because they understand, they realize that this system is coming down. Everyone is getting out. And we can see as we move into 2017, things are going to rapidly deteriorate very, very quickly. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.